Yo, what's going on, YouTube? Welcome back to another trade recap. Today is Tuesday, the 25th of August, and we ended up getting a win. But as always, guys, you know the drill. We can't record without a little lippuccino. This time we got peach. Sorry, I got a piece of hair in it on it. But yeah, uh, peach 6 milli. It is what it is. But yeah, going over yesterday's price action, it was booty, so I ended up not taking a trade. And then on Friday of last week, I was unfortunately traveling quite a bit, so I did not get the opportunity to trade, which is okay. I opted out of trading because I got a lack of sleep. Um, and yeah, I just wasn't in the right mental space to put up capital. So I just decided to play it smart and not trade on Friday. And yeah, of course, I'm sure you guys saw yesterday was some booty PA, and we got no entry opportunities. So yeah, and now we're here for Tuesday. So as always, let's start on the higher time frame, being the daily time frame. And what do we have? We have this 1 hour SIBI right here. And what else do we know? We know a breaker structure towards the downside, closing below the swing low. So what do? I mark out this premium wick and the quadrants because I expect it to act as support, as resistance for price. Um, and I also mark out this volume imbalance, this yellow box, which is a good draw on liquidity. Moving down to the 4 hour, we notice that that daily wick is the same as this 4 hour wick. So again, just more price sensitivity to these levels. Um, Sorry guys, just let me drink my overly priced water. That tastes like every other kind of water. But yeah, we also know this bullish IFG. To me, this should give us some support if we do trade down into this gap. And we note this unfilled busy right here. So this is a good draw on liquidity, bearish draw on liquidity, and this gap up here is a good bullish one. Moving down to 1 hour, we see that these 1 hour candles are respecting the daily wick. We have all these relative equal highs up here, and our primary buy side being the swing high for the range, for this range right here. We note this swing low, and we note that we close below consummate encroachment of this bullish fair value gap, which is a bearish price signature. If we were truly bullish, we would have respected consummate encroachment and closed above it, but we did not. Also note this bullish IFG because at this point I am expecting to go trade lower in today's session. I am expecting to trade lower in today's session, so if we do come all the way down and sweep this minor sell side, I do want us to catch some support from these two gaps, and then flip bullish again and take out all these relative equal highs. On the 15-minute, we see the same thing. All these 15-minute gaps, candles respecting the black dashed line, which is again the daily wick quadrants. We note this unfilled bearish fair value gap. So what do I want to see? I want price to trade up here, respect it, and then trade lower all the way down into these gaps. So moving on to my notes, I said premium wick quadrants marked out should act as resistance. Unmitigated SIBI above, good bullish strong liquidity. Volume imbalance below current price level, good bearish strong liquidity. So I gave myself two options, two targets to chase after, just in case price was either bullish or bearish for the day. For the 4 hour time frame, I know the candles respect the daily premium wick. Let's see, if we are bullish, I want to see a strong bullish candle close relative to the quadrants. So what I mean by this is I want to see that 4 hour candle close above the red dash line or even the white dash line, because this will just give us some bullish momentum and some bullish price signatures. For the 1 hour, I said we created a bullish CISD. However, we did have some bearish price signatures, respecting daily wick quadrants, respecting consummate encroachment of massive 1 hour SIBI, close below consummate encroachment of the latest SIBI. This is supposed to be busy. So this is the large 1 hour SIBI I'm talking about. We failed to close above this red line. On the 15-minute, I said created bearish IFG, 15 candles not closing above daily wick quadrants, bearish, unmitigated SIBI above, want to see consummate encroachment get respected and send us lower. For news, I marked out that we had 10 o'clock data coming out, which was consumer confidence. It's just an orange folder news event, so nothing to worry about. And overall, I said I'm leaning bearish. Daily wick quadrant is showing strength as a resistance level. I noted that no time frame wants to close above the lines, and we created a 15-minute bearish IFG. But I said, however, the 4-hour time frame, 4-hour time frame just created a bullish IFG. So this bearish PA could be the manipulation move prior to expansion higher. So I just marked out two possible scenarios. Either way, I had good draw on liquidities for bullish price action and bearish price action. So opening up, we open up premium with our opening range gap, creating an 187-point opening range gap. Like I always say, whenever we have this big of a gap, I want us to continue in the same direction. And I said we'll be super bullish if we did not hit consummate encroachment by 10 o'clock. So what happens right when we open? We sweep minor sell side right before market opens and end up creating this bullish 5-minute fair value gap. So for me, this switched my bias to short time frame bullish price action. I want to see these swing highs get taken. So I was looking for long entries after this 5-minute bullish IFG did get created. So what happens? We drop down to the lower time frames, being the 1 minute. We see this bullish price leg right here. And as you guys can see, we did create our first percentage fair value gap, and we did leave it unmitigated. So I was expecting price to retrace lower, mitigate this gap, and then go higher. So what do? I wait for a bullish IFG to be formed, and that's exactly what happens. As soon as we get this candle closure right here, I place my limit at this candle's opening price and swing this, and I use the 930 swing low as my stop loss. The reason I didn't use this swing low is because I could see the scenario where we re-sweep this low and then go higher, so I didn't want to get stopped out. So I just chose to have a bigger stop loss for this trade. So what happens? We get a nice, awesome bullish price displacement upwards after coming down and retesting this first percentage fair value gap, which it held beautifully. This swing high was my break-even point. So as soon as we got a candle closure above this swing high, I decided to go break even. And as you guys can see, I place 5 sell limits right here at the swing high. And then I place one at the consummate encroachment of the daily wick, and one at the upper quadrant. And what ends up happening, as you guys can see, we took out my first TP. I ended up selling my 5 contracts right there with that limit order. But we had a very bearish reaction. After sweeping that classic liquidity sweep reversal. So you guys can see we did sweep the high. We created this bearish IFG and respected this SIBI. At this point, I was pretty confident I was going to get stopped out with my remaining 2 contracts. And I said, going to get tagged out more than likely, reversal playing out nicely. And that is exactly what ends up happening. So these are my notes for today's trade. My reasonings behind it was minor sell side swap, created 5-minute bullish IFG, traded back down into the first percent of fair value gap, respected consummate encroachment to the tick. And I said we had relative equal highs above. So as you guys can see here, we respected consummate encroachment of this bullish fair value gap, which is a bullish price signature. So after seeing this, I was extremely confident that we were going to take out at least this swing high. And yeah. And for that short play, here's my explanation of why I got stopped out at break even. In my pre-market notes, I mentioned the candles are respecting the daily wick quadrant, which is a bearish price signature. Swept minor buy side, but failed to sweep the higher time frame swing highs. And we just generated more buy side liquidity for later to trade back into. And we created this 1-minute bearish IFG, 1-minute SEBI, tapped into it and respected it beautifully. And we still hadn't closed above that 15-minute SEBI marked out during pre-market, which is bearish price signature. And I mentioned this short is the trade of the day, not the trade I took, and it aligns perfectly with my pre-market analysis. So, like I said there, this was honestly the play of the day. However, we did catch a nice little bullish price leg going upwards, which I'm not upset about. But if you did end up taking this short, it was, in my opinion, it was the better trade. Yeah, it was just beautiful. Price action was showing bearish momentum going into this New York AM session. And yeah. And what ends up happening, ICT actually took that exact same short I called out. I'll show you guys right here. So he enters as soon as we sweep it, uses this 1-minute SIBI, and of course you guys know how it goes. He cashed in on that short, but yeah, it's just pretty cool seeing my mentor, who I learned all my trading knowledge from, taking the same trade as I had mapped out. But yeah, that's basically it for today's session. Thank you for watching. I hope you guys learned something. Peace.